All right, good morning, folks. This is David Shorkenshire with Brown & Brown of Louisiana. We are having this seminar today for all of our Brown & Brown clients. I hope you find it informative. Some housekeeping items. First of all phones are going to be muted, so you won't be able to speak during the presentation. Questions may be submitted to the presenter via the chat feature on your dashboard. Type them in, and we will try to address them at the end. At the end of the presentation, and through email if time is not available, we'll answer them a little bit later. The slides will be made available following the webinar, and we are recording the webinar, and the video will be available Monday or Tuesday. Our speaker today is Mary Bauman. Her bio is that she's an attorney at Miller Johnson in Grand Rapids, Michigan. She works with employers in establishing, amending, and terminating employee benefit plans of all types. Ms. Bauman is the chair of the firm's Employee Benefits and Executive Compensation Practice Group and leads the healthcare reform team. Ms. Bauman is recognized by Chambers USA for employee benefits and executive compensation and is listed in the best lawyers in America for employee benefits law. Other significant honors include being recognized as a Michigan super lawyer, a client service all-star by BTI Consulting, most influential woman by Grand Rapids Business Journal, and a woman in the law by Michigan Lawyers Weekly. And with that, I'll turn this over to Mary Bauman.
Hey, David, thank you so much. And I've had the privilege of meeting David in person, even though I am on the phone this morning with you from Michigan, and thoroughly enjoyed working with David and his team. So we planned this seminar, Are You Ready for the New ACA Employer Reporting Requirements? Because as David and I were just discussing before the call began, this is really a very, very big deal. One of the most significant, I think, compliance requirements for employers, and one that many employers, I think, haven't really been aware of, or if they are aware, frankly, they are fatigued by all of the other ACA requirements, and it's like this is just one more. So I understand your frustration and your pain, and we're going to try to walk through this together today and try to be constructive and hopefully sort this out in a helpful way for you. Okay, so now I'm having a hard time advancing the slides. There we go. Okay, so what is the reporting all about? Well, remember, the reporting is to enable the IRS to enforce penalties. And the individual mandate penalty started to take effect last year, and the employer pay or play penalty takes effect this year in 2015. And beginning next year, the IRS is going to require this new reporting so they can enforce the two penalties. Where did we come from on this? Well, last year, final regulations were issued about these new reporting requirements. I refer to the ACA as the Affordable Care Act, or I sometimes refer to it as healthcare reform, but this is all as part of healthcare reform. And then this past summer, the IRS released what we call draft forms and draft instructions for the new reporting requirements, and then they issued final versions of the forms and instructions just last month. Now, interestingly, the forms and instructions are for use right now with respect to reporting with respect to the 2014 calendar year, and it's possible that the IRS will further revise the forms and instructions before they start to be used for 2015 due in 2016, but at this point we don't think that any changes that are made are going to be very significant. So there are two different types of reporting, as I mentioned earlier, which are going to be required: individual mandate reporting and pay or play reporting. Now, these two reporting obligations are set forth in two different sections of the Internal Revenue Code as added by the Affordable Care Act. One is Section 6055, and that's our individual mandate reporting section, and the other is Section 6056, which is our pay or play reporting section of the Internal Revenue Code. We're going to first talk about 6055, which is the simpler and probably not as consequential a reporting requirement. So 6055 requires annual reporting to the IRS and also to individuals that I call responsible individuals, which is another way of saying they are the policy holders, and it informs the IRS and those individuals as to whether the coverage constitutes minimum essential coverage, and that's because we all have to have minimum essential coverage, be enrolled in that coverage, or potentially pay the individual mandate penalty under healthcare reform. So first thing I think out of the gate to really emphasize here, and that is 6055 reporting applies regardless of an employer's size. So it's if you offer a health plan to your employees, whether you are subject to the pay or play or not, you must comply with 6055 reporting. And the other thing to emphasize is that this reporting applies on a calendar year basis, and that is regardless of the 12-month cycle upon which you renew your health plan coverage. So who is responsible for the 6055 reporting? The good news is if you are fully insured, the insurance company is going to assume this reporting on your reporting requirement on your behalf. And that's both for what you send to the IRS and what you provide to the individual. So if you are on the call today, and remember, the plan that we're reporting about is what I call your primary medical plan. We are not reporting dental or vision. We're not reporting with respect to your HRA if you have one, or your HSA, if you've got an on-site medical clinic. Those are what I call ancillary health benefits, and that's not what the IRS is asking about. They want to know about the primary group medical coverage that is being offered to the employee and that the employee is enrolling in. On the other hand, by the way, if you are self-funded, then you, the employer, are responsible for the 6055 reporting. So that's an important distinction. If you're fully insured, you're off the hook. If you're self-funded, you need to do this. Now, 6055 reporting is completed using what I call the B forms. B as in boy, the 1094B and the 1095B. The 1094B is a transmittal form. That's what you're going to be sending to the IRS. And you're going to be sending that form to the IRS along with the 1095Bs, which are called the employee statements. And that's what needs to be provided to each what we call responsible individual or policyholder. This may seem familiar to you because it is very, very similar to the W-2. In other words, every individual employee gets a W-2, and then the W-2s are batched up using a transmittal form known as the W-3, and then they are all remitted to the Social Security Administration. Here we're going to the IRS instead of the Social Security Administration, but the process is very, very much the same. So what kind of information is going to be in this employee statement? Well, first of all, you're going to include information about the provider of the coverage. So in other words, if you're fully insured, you're going to list the insurer. If you're self-funded, you're going to list the employer. And then you're going to list some identifying information about each responsible individual. That's what we call the policy holder, most typically the employee. Could be a former employee, like a retiree. It could be a surviving spouse. It could be a COBRA qualified beneficiary, but it's the primary person who is on the coverage, the primary insured, the policy holder. And then you're also going to be providing information about each covered individual on that particular person's coverage. In other words, spouses and dependents. Now, one of the really, really interesting things about the new guidance is that you need to report the Social Security number of both the primary insured and each covered individual. My guess is that all of you have the Social Security numbers of your employees. That's not a problem, but you may not have it, for example, in the case of a surviving spouse or a COBRA qualified beneficiary, and certainly you may not have it with respect to an enrolled dependent. And you may be sitting there on the call today saying, well, of course I don't, because I'm concerned about HIPAA, or I'm concerned about state Social Security privacy laws, I'm concerned about other best practices, and so if I've intentionally not collected dependent Social Security numbers. Well, unfortunately, you need to go and change your habits and now go ahead and try to collect that information. And if you don't have it, I would strongly encourage you to start trying to collect it now. Now, there is a fallback procedure in the guidance that would enable you to use the Social Security number, the date of birth of the person if you can't get the Social Security number, but that's only available after you've made reasonable efforts to try to get the Social Security number. And some examples of that, you have to basically do a 3 strikes and you're out type of process, where you would first try to get the dependent's Social Security number when they first enroll in your plan, and then as of the end of the first calendar year that they're enrolled in your plan, and as of the end of the second calendar year. That's kind of a simplistic explanation, but that's the process that you would go through. And then if you go through all that and you still can't get their Social Security number, you can use the date of birth, but they really, really want you to use the Social Security number. So here is a screenshot of what the 1095B, this employee statement, looks like. And as we look at this screenshot, it's a 1-page form, and as you can see under Part 1 there, Part 1 is asking for information about this primary insured policy holder, responsible individual, and that's generally going to be the employee. And by the way, this is all employees. So if, for example, you have a health plan and you provide coverage not only to full-timers, but maybe you also offer coverage to part-timers, this would be a form that you would use for the part-timers as well as the full-timers. It's anybody enrolled in your coverage. Now, what about somebody who's eligible that doesn't enroll? Well, they would not get a 1095B because they're not enrolled. The purpose of the form is to tell them about their coverage they're enrolled in. And then Part 2 and 3 gets at the employer and also who is the coverage provider. If it's self-funded, Part 2 and 3 are basically going to be completed in the same manner. And then Part 4 is, as we've discussed, the names of the other folks who are on that person's coverage. It's going to be people like the spouse and dependent children. And then you'll see there that there's boxes on the right-hand side to say, well, what months were they covered? And for purposes of this rule, this is a little bit different than when we get to the next set of forms, but for purposes of this rule, we are looking at if they were covered under the plan for just 1 day during the month, you're going to check that box. So let's say I have a baby and the baby is born on January 17, and I promptly notify my employer and the child is enrolled as of January 17. That would be I would check January, the January box for that child, even though they were not covered before then, and of course, obviously, were not born. But the other thing that you'll see there's an all 12 months box. I apologize if it's difficult to see that on your screen, but that's the box immediately to the left of each different month. If the person is covered for all 12 months, you can check that box. But if they're not, then you would look and complete the months in which they were covered under the plan. So that is the employee statement, the 1095B form. In terms of how this is then reported and due, the dates again are very, very similar to the W-2. So the 1095B has to be provided to each responsible individual basically by the first business day on or after January 31 after the calendar year closes. And that's just like the W-2. Can you provide it with the W-2? Yes, you can. If you want to, that's specifically allowed, but you don't have to. But it's basically the same distribution deadline date. And then same thing in terms of transmitting it to the IRS, same deadline dates as the W-3 form, and that is that the 1094B and the 1095B have to be filed with the IRS by the first business day on or after February 28, and that's in the case of paper filing, or March 31 if filing electronically. Now, if you are on the call today and you would have more than 250 employee statements that you would have to submit, then you have to file electronically. So your deadline is March 31. But if you have no more than 250, you could either file electronically by March 31, or you have the option to do the paper filing, and then that's where the February 28 date kicks in. In terms of the individuals getting the 1095Bs, it's the same rules, basically very similar rules as the W-2, and that is that you basically have to provide these hard copy. You can provide electronically, but it has to be with affirmative consent, and it's not affirmative consent to receive the W-2, it's affirmative consent to receive this form. So my guess is I anticipate that most clients, most of your clients, David, are going to be wanting to do this on a paper basis versus an electronic basis to the responsible individuals. So here's an example, and I thought this might be helpful for the first year. So for the first year that we're going to have to do reporting is 2015. And you can do it optionally earlier, but I don't think I know of anybody that is. But the first year that it's required is 2015. And then that means that the 1095Bs have to be provided to the responsible individuals. Normally it would be by January 31, 2016, but since that is a Sunday, you've got until February 1 of 2016. And then all of the 1095Bs are going to be batched up and filed along with the Form 1094B and submitted to the IRS. Normally, if you could do it by paper, it would be by February 28, but since that's a Sunday next year, you'll have until February 29 because next year is a leap year. And then if you are going to be filing electronically, the forms 1094B and all of the 1095Bs will be batched up and filed electronically by March 31 of next year. So that is the sequence and the timing for the 1095B and the 1094B, the B forms. Now, do I have to do this myself? And the answer is no. If you are, for example, in a controlled group, meaning that you are part of a group of commonly owned businesses, it is possible that one entity within the control group, maybe the parent corporation, could assist you. But please know that there is a separate 1094B and 1095B reporting requirement with respect to each EIN. So one EIN could assume responsibility, but they're really doing it on behalf of the other corporation. In addition, you could say that you could ask a third party to do this filing on your behalf. It could be a third party administrator, but it could be some other third party. Maybe you're going to contract with your payroll vendor to do this for you. But please note that if you do hire a third party, that will not transfer your liability for IRS reporting failures. Rather, the IRS is still going to consider you to be ultimately responsible and will be looking to you. You might be able to negotiate something in your service contract that would require the third party to indemnify you, but in general, the IRS says the buck stops with you. Now, one bit of good news is that if you are self-funded, you can complete the reporting for 6055 on a combined basis with your 6056 reporting. So you'll only be required to submit one set of forms to the IRS and only be required to submit one set of forms to individuals as well, which is a huge positive. And then we even got some further relief on this when the final instructions and final forms were issued last month, which I'm going to turn to now. So now we're going to move on to Section 6056 reporting. And Section 6056 reporting only applies to those of you who are large employers with 50 or more full-time employees and full-time employee equivalents. In other words, if you are not subject to the pay or play, you do not have to do 6056 reporting. But if you are subject to the pay or play, you do. There are two purposes of the 6056 reporting. The first is what you might think, and that is to help the IRS enforce the pay or play penalty. But it's also to assist full-time employees to determine whether or not they are eligible for a premium tax credit to reduce their cost of coverage if they would go to the exchange and try to enroll in coverage there. So it's really kind of a dual purpose set of reporting. As I mentioned, the 6056 is not required by small employers. But some of you today on the call may be what I call a mid-size employer. That means that you are between 50 and 99 full-time employees and full-time employee equivalents. You are not subject to the pay or play until 2016. You get a 1-year break. Even though you get the 1-year reprieve, however, you still must report under 6056 for 2015. You will get to check some boxes to give you some transition relief, but you are still subject to the reporting requirement for next year that's due next year for this year, even though you get that 1-year break. So, as we have talked about before, but I want to emphasize, if you are fully insured and you're a large employer subject to the pay or play, so you're only going to have to do the 6056 reporting because your insurance company is doing the 6055 reporting for you. But if you're self-funded, you have to do both 6055 and 6056 reporting if you're a large employer. But again, you're going to be able to do this on a combined basis under 6056. So 6056 reporting is completed using what I call the C forms, 1094C and 1095C. And I know that this is a little crazy, right? We had 6055 with the 1094B and the 1095B, and now we've got 6056 with the 1094C and the 1095C. So they are somewhat parallel, but it's still difficult to keep track of. So similar to the B forms, the 94 form, the 94C, is that transmittal form, and it again is required to be filed with the IRS along with all of the employee statements, which are the 1095C. And the 1094 B form, though, is a pretty, it's not just a simple transmittal form. It requires a lot of additional information. And I think that the reason for that is that the transmittal form is really the form that the IRS is going to rely on in trying to figure out if the employer owes a penalty under what I call the $2,000 penalty, the A portion of the pay or play penalty. And so they're gathering more information that would be normal in a transmittal form. In fact, you probably noticed that I didn't even give you a screenshot of the transmittal form for the B forms because it's such a simple form that it's really not even worth mentioning. But here we've got a lot more information. So for the 1094C, we're going to be asking to share information about the employer. And then there's also a series of questions in here that is going to ask under Part 2. One is this the authoritative transmittal? And that's probably not going to apply to many people on the call today, but in essence, it's an ability of an employer to file more than one transmittal form per EIN. Every EIN has to file its own 1094-C, EIN meaning taxpayer ID number, but it is possible that you might be able to do multiple 1094-Cs. Might be a situation where you're one company but maybe two divisions, and one is located in Louisiana and one is located in another state. You could file multiple 1094-Cs in that situation, but then you have to do this authoritative transmittal business. You also have to disclose whether you are part of a controlled group. Now, you don't have to report on commonly owned businesses with no employees, but you do have to report on other commonly owned businesses with employees. And here, I think that I want to emphasize that control group for this purpose is the same meaning as for purposes, for example, of your qualified retirement plan, for purposes of determining whether you're subject to COBRA, but it's the same set of rules. It's under 414 of the Internal Revenue Code. And my experience recently has been that there are a lot of employers out there that may be commonly owned, but they're not part of a control group. And this is a gross oversimplification of the rules, but basically you need an 80% common ownership interest to be a part of a control group. But it's going to be increasingly important, if you do have a group of commonly owned businesses, that you have a really good handle on whether you are part of a control group, because that's going to be very, very important with this reporting and also for purposes of the pay or play. And then you're also going to be asked to report whether you qualify for transition relief. And this would be a place, part 2 is a place where you're going to say that you're a mid-size employer. And then you're also going to be asked whether you qualify for any simplified reporting. And I would say that the word simplified is a misnomer, but it is nevertheless a question that is asked. And we'll talk about that a little bit later. And then there's a couple more parts to this transmittal form. Part 3 is going to ask about which months the employer offered minimum essential coverage. For this purpose, we're really looking at the whole month, not just one day of the month. There are some exceptions to that rule, for example, in the case of somebody who may have terminated employment during the month. But in general, it's the whole month. And they're asking about the number of full-timers in each calendar month. And here, this is part of your measurement period analysis that my guess is you either have done or are working on or are about to work on. This is where you're going to translate that full-time employee analysis from the measurement period into the reporting. And then also you're going to be asked to report on the total number of employees each month. I'm not quite sure what they're getting at here, but they are asking for this question, and I'm not so sure they need it for purposes of the pay or play, but they are asking it. And you might say, gee, Mary, what in the world does this mean? How do I do this? Well, they've given us some options in the instructions, and you can report the total of number of employees for each month. That would include part-timers and other non-full-timers, by taking a snapshot either as of the first day of the month, the last day of the month, or the first day of the first payroll period starting in the month, or the first day or the last day of each payroll period starting in a month. But whatever method you choose, you have to do that in a consistent manner. You also have to indicate whether, again, you're part of a control group, and whether you qualify for transition relief. And there's different kinds of transition relief under the ACA, under the pay or play, but this one is really focused primarily on that mid-size employer question that we talked about earlier. And then finally, part 4, once again, asking for more information about control group. And here you're going to be listing all of the other entities that are in your control group that have employees, and you're going to be listing them by order of from who has the most employees to the fewest employees. So it's a lot of information in this transmittal form. So let's take some screenshot looks at what the form looks like, and it is multiple pages. So again, part 1 is asking for information about the employer that's and you can see here it says applicable large employer member. So if you're not part of a control group, it's going to be the employer. But if you are part of the control group, you're going to be answering this on a employer by employer basis within the control group. And I'm sure as some of you know that are part of a control group, if I'm part of a control group and together we're over 50, even though I might only have 10 employees, I'm part of that large employer control group, so I'm going to have to do this reporting. Then when I get to part 2, I'm answering some of those questions. I'm going to be answering questions about, is this the authoritative transmittal? I'm also going to be reporting, as you can see there in line 20, about the total number of 1095Cs that are being filed. And I'm going to be answering a question about the control group, and then I'm going to be answering questions in line 22 about whether I qualify for any simplified reporting. That's boxes A, B, and D, and then also answering that question about the mid-size employer in box C. Then if I go to the next page, which is part 3, this is where I'm going to be answering the question of, did I offer coverage for all 12 months to my employees? And I'm going to be answering questions about my full-time employee head count and my total employee head count. I'm also going to be answering the question in D, whether I'm part of a control group, and E, whether I qualify for the mid-size employer relief. And then again, part 4 is asking for questions about the other employers in the control group with employees. So that was the transmittal form. Now I'm going to move on to the employee statement, and this is the statement. You can see here I'm required to give this to every full-time employee, and that's every full-time employee regardless of whether they are enrolled in your health plan. And this is on a calendar year basis, so even though I may be a non-calendar year plan and I qualify for the relief, so I don't have to comply with the pay or play till the first day of my calendar year, I'm going to be indicating that on this form, but I still have to report on this form for the entire calendar year. But in addition to those full-time employees, if I have non-full-time employees, like a part-timer who is enrolled in my plan, I'm going to be giving them one of these 1095Cs. And I'm also going to be, as you can see a little bit later, if I'm self-funded, I'm probably also going to be using the 1095C to report with respect to other categories of individuals who may be primary insureds, like that COBRA qualified beneficiary or retiree, and I'm going to be using the 1095C for them as well. And so I'm going to be using this, maybe not completing all parts of the form, but I'm going to be using this form for them as well. So here's the different parts of this form, and let's talk about them a little bit more. The first part is going to be asking information about the full-time employee, or the what I call responsible individual or primary insured. So I'm going to be reporting some information about them, like their address and social security number, things like that. I'm also going to be including some information about the employer by EIN in part 1. And then we move on to part 2. And part 2 is going to be a challenging part of the form. This is where a lot of the action is. So you are going to be reporting for all 12 months, and here it's whether you offered coverage, and I kind of misspoke myself when I was talking about the transmittal form, the 1094C. You aren't really concerned about offering coverage every single day of the month for that form, but you are here when we get to part 2 of 1095C. And you are going to be reporting information about whether you offered that person coverage for the entire month, and if you didn't, why you didn't. Maybe you didn't offer them coverage because they were in a waiting period, or maybe they weren't hired yet. Maybe they terminated employment. Maybe they were in an initial measurement period because they were a newly hired variable hours, part-time, or seasonal employee. So you're going to be reporting all of this information using what I call indicator codes. And so you're going to, and these indicator codes are set forth in the instructions, and you're going to be providing information about what coverage was offered to them. Was it affordable? Was it of minimum value? Did you include coverage to dependents? And you're also going to be providing information about whether they were enrolled, and if they were not, why they were not, or why they were not offered coverage. And by the way, one question I get back here is, if they waived, do I have to say, why they waived and where they're enrolled? And the answer is no. So you don't have to worry about that. If they waive your coverage, that is, you have to be able to show that you offered them coverage, but you do not have to track further that they waived it in order to enroll in other coverage, or that they went bare or something like that. Now we get to Part 3 of the form, and Part 3 of the form really is in identifying information about the not only the responsible individual, the primary insured, but the covered individuals. This is a lot like the 1095B form. And so if you are fully insured and you are having your insurance company report with the B form, you can totally skip Part 3 because you are not responsible for it. Now, if you're self-funded and you're going to be filling this out, please note that you're probably going to want to use this section of the form for individuals who are enrolled in your plan who you're not otherwise required to issue a form, like a retiree, a COBRA qualified beneficiary, a surviving spouse. Maybe you offer coverage to non-employee directors on your board of directors. Those individuals, you could either complete Part 3 for them, and also Part 1, by the way, or you can do the B form. You have the choice. You could do one or the other, but you don't have to do both. And so that's a nice feature for you. My guess is you're probably going to want to use this form, and so you can do all of your reporting on a consolidated basis. But for those individuals, you would not have to complete Part 2 that we just talked about. Another question that I sometimes get is, well, Mary, how do you decide whether the person isn't an employee? And here's the deal. Let's say I have a retiree or a COBRA qualified beneficiary. If they were employed just 1 month of the year, and then they were a retiree or a COBRA qualified beneficiary for the balance, I have to use the 1095C for them. I need to issue them a 1095C. But if they were not, if let's say they terminated employment the year before, and they are simply on my plan now as a retiree or as a COBRA qualified beneficiary, that's where I consider them to be a non-employee. There is no 1095C reporting obligation for them, and so I can report their coverage either using the B forms or the C forms. I have that choice. And if I haven't made your head spin yet, I probably will the rest of this webinar, but I apologize for the incredible complexity here. So now we're going to look at a screenshot of the C form. This is the 1095C form, and this is known as the employee statement form. And Part 1, again, is pretty straightforward and simple. You're reporting on the employee, and again, it's all full-time employees regardless of whether or not enrolled. It's going to be part-time employees who are enrolled, and potentially non-employees like COBRA folks and retirees. If you decide not to use the B forms for them, you can use the C form. And then also information about the employer. And then in part 2, this is where we get kind of complicated, where we have to do this for all 12 months, and that is, was I offered coverage for the entire month? And if I was offered coverage for all 12 months, I'm really easy because I can just do that first box. Otherwise, I have to go month by month. And then I'm also reporting on how much did single employee coverage cost under my cheapest medical option. Now, again, there is some relief from completing that line 15 where we've got our dollar signs if we qualify for some simplified reporting that I'm going to talk about next. But in general, we're going to be asked to include that. That's not the actual premium they paid. It's the premium that applies for single employee coverage under the cheapest medical option, because that's our test for affordability. And then in the last box, I'm also going to include some information there about whether or not I qualify for any safe harbor relief. And here I might have checked, for example, this is going to give me an opportunity to report on any non-calendar year plan year relief I might have, affordability that I might have. So again, there's going to be indicator codes here that tie back to the instructions, but this is going to give me an opportunity to take advantage of some of that relief here. Also, basically going back up to box 14, I also have some opportunity to use some indicator codes to show me why I wasn't offered coverage because maybe I was in a waiting period or a limited non-assessment period. So there is some pretty complicated reporting here with the indicator codes. It's not just a matter of saying yes or no. And then part 3, this looks a whole lot like the 1095B form. And again, if I'm fully insured, I'm going to be skipping right over that. Those are the 3 key parts of the form. So just like the forms, the 6055 reporting, this is reporting is required in the first calendar quarter of the calendar year after the prior year ends. And again, for the first year for which reporting is required is the 2015, with the reporting due in the first quarter of 2016. Same schedule as the 6055. Also, just like the 6055, you can work together among the control group on your reporting, and you can hire third parties to help you. Same exact rules. Now we're going to move on to 3 different types of what we call simplified reporting under the C forms. And I laugh because the use of the word simplified, I think, may be an exaggeration. I don't find that this simplified reporting is all that much more simple, but nevertheless, we have 3 different types of simplified reporting. The first that I'm going to talk about is available for all years. The second that I'm going to talk about is available only for the first year. And the last one that I'm going to talk about is also available for all years. So the first type of simplified reporting is called the qualifying offer. And this is a situation where I offer coverage to someone for all 12 months, and the coverage for employees only is affordable, and it's affordable under the federal poverty line safe harbor. And you may recall under the affordability rules that there are 3 different methods of determining whether my coverage is affordable or not for purposes of the pay or play penalty. One is using box 1, W-2 pay. Another is using rate of pay, and the third is using the federal poverty line safe harbor. So you can use any of those 3 methods, but to qualify for this simplified reporting, you have to say that you use the federal poverty line. And the federal poverty line, I think, is the easiest one to ascertain, and it's probably the most favorable to the employee. the federal poverty line says we compare the cost of coverage that the employee has to pay for that single employee coverage tier, cheapest medical option for a year, and we compare that to 9.5% of the federal poverty line for a single person household. And that roughly works out to a little bit more than $92 a month. And so if the coverage that you offer doesn't cost more than $92 a month and meets that minimum value test, which is basically 60% of the average person's eligible expenses, and the employer offers coverage to both the employee's spouse and dependents, then you can qualify under the qualifying offer simplified reporting. Now, you may say to me, gee, Mary, I thought to avoid the pay or play, I only had to offer coverage to the dependent children. And that is true. But to qualify for this simplified reporting, they want you to offer coverage to both the spouse and the dependent children. So it's not a pay or play requirement, it's just a requirement to qualify for this simplified reporting, that you offer coverage to the spouse. Now, if you do this for someone, for an employee, for all 12 months of the year, you can use an indicator code rather than actually putting in line 15 of the 1095C, the actual amount of the premium for the lowest cost single employee coverage tier. So that is something that is available to you for line 15 of the 1095C. In addition to that, again, if you offer this person coverage for all 12 months of the year, if you don't offer them coverage for all 12 months of the year, you don't qualify for the qualifying offer, but for the months that you do simplified reporting, but you could include for those months, you could use the indicator code in line 15. But otherwise, you can give these employees, if they did get a qualifying offer for all 12 months, instead of giving them the 1095C, which may not be very meaningful to them, you could instead give them a statement. And the statement would say information about the employer, contact information if the person has questions, and finally, a statement that for all 12 months, the employee received a qualifying offer and the person is not eligible for a premium tax credit. But here is the problem if you use that, and I would say that, you know, in many respects, if a person gets that statement, that's going to be more meaningful for them than a 1095C, which may not mean much to them. But here is the problem with this little simplified reporting. First of all, if you are self-funded, remember you have to give the person a 1095C. You have to give that to them because you're using the 1095C in lieu of your 1095B. So as a practical matter, if you're self-funded, for anybody who's enrolled in your plan, you're not going to be able to use that statement. Now, you could use the statement for somebody that's full-time and not enrolled in your plan, but for anybody that is enrolled, you're not going to be able to use the statement. In addition, the other thing to keep in mind is, even though you can use the statement for the person, maybe, you can't do that with the IRS. So you're still going to have to complete the 1095C and submit that to the IRS, even though you actually don't provide it to the employee. So it doesn't really get you out of preparing the 1095B, but it may get you out of distributing the 1095C, to individuals. Then there is a second form of simplified reporting that is available just for this first year. And in this first year, if you certify, and that's just by checking the box on the 1094C, that you have made a qualifying offer to at least 95% of your full-timers, you do not, even if it's not for all 12 months of the year, you qualify for this simplified reporting just for the first year. And if you qualify for this, you basically get the same type of relief that you get for the qualifying offer that you do under this simplified reporting method, but it's just for the first year. And it's got the same advantages, disadvantages, mechanics as the qualifying offer simplified reporting. That gets us to the third simplified reporting, which is also available on a ongoing basis. And here, where you would report to the IRS that your coverage is of minimum value, and it's affordable using any of the 3 safe harbors, not just the federal poverty line, and that you offer coverage to at least 98% of all of your full-time employees. If you qualify for this transition simplified reporting, what it buys you is you don't have to include the number of your full-timers for each calendar month, and that is on page 2 of the 1094C, one of the middle columns. So that's the simplified reporting that it gains you, that there's one piece of information that you can leave out. So in conclusion, what do you need to be thinking about? I think that the first thing that you need to be thinking about is if I did work on measurement periods and stability periods, I'm so glad I did, because that's going to help me in figuring out who's full-time for when I do all this reporting. And if I didn't, I'm going to make a resolution that I'm going to get my arms around that now. And then I think the other thing you need to be thinking about is, where is this information? Do you have this information on your system? Do you not have this information on your system? If so, where am I going to get it from? Am I going to get it from my insurer? Am I going to get it from Brown & Brown? Am I going to get it from my payroll company? How am I going to get all the information that I need? And then you're going to have to think about, how are you going to get your arms around this reporting? Well, if you, let's say, have 200 employees, this might be a manageable thing for you. But if you've got 2,000 employees, you might need some help. And you might need to interview some outside vendors to help you. You might need, but I think for you, it's how can I automate this? And can I automate this through my own internal IT information system, or do I need some help from outside? And then finally, one other point I want to make is that in addition to the pay or play penalties themselves, there are also separate penalties under 6055 and 6056, which would provide that if I don't file my forms, if I file them late, if I file them incorrectly or incompletely, then I could face additional penalties. Basically, there's some exceptions and some variations, but the general rule is $100 a return, and the IRS has already announced that as long as you are acting in good faith for this first year, they have no intention of assessing that penalty against employers. So that's a slight bit of reassurance. So with that, David, I think I am going to turn it back over to you, and I think that we can entertain some questions from folks if anyone has any.
Mary, I'm having some technical difficulties. I don't actually see the questions. I'm going to have to ask Amy to see if she can't help with that.
Absolutely. I think Amy indicated that we may have a question already, and if she can call that up, I will. Box 15. The amount that, okay, this is a question about box 15 on the employee statement, which is 1095C. The amount that the employee pays, or the premium, the amount that the employer pays. Box 15 is asking about the employee's share, so the amount that the employee pays, and that it's for the lowest cost single coverage with under the lowest cost medical option. This particular question is asking, well, we don't charge anything at our company for single coverage, presumably for the cheapest medical option or only medical option that's offered. And if that option offers is minimum value coverage, then you can put 0 down there because there's nothing that's going to be required. So that will be very easy for you to put down 0, which is good news. Any other questions, folks? Okay, here's another question. Is the insurance carrier filling out the 1095B forms for us? And that is absolutely correct. Is the 1096 form, the 6056 forms, the C forms, are for self-funded employers, but also for all large employers. So if I am fully insured and I am an under 50 small employer, I have nothing to do because the insurance company is doing the B forms for me and I don't have to do the C forms. But if I am a large employer over 50 or more and I am fully insured, then the good news is I don't have to worry about the B forms, but I do have to worry about the C forms. But when I go to do my 1095C, I can skip part 3 of that form because that's duplicating the information in the B forms. So I still have to file something if I'm a large employer and fully insured. Okay, David, another question. We have a control group that has multiple plans with a combination, this is a great question, with a combination of self-funded plans and fully insured plans. Okay, let's stop right there before we answer the rest of the question. And that is, but consolidates mid-year to one fully insured plan. Would the previous self-funded plan have to file both 6055 and 6056 for partial year? Yes. So in other words, if I have fully insured plans and self-funded plans, I'm looking at that by calendar year and by months in the calendar year. So if I have a fully insured plan for part of the year, the insurance company is going to take care of things for me for that part of the year, but for the self-funded portion of the year, I'm going to be responsible. And then similarly, if I have, let's say, 2 options, one option is fully insured and one option is self-funded, my insurance company is going to take care of the fully insured plan for the entire year, and I'm going to be responsible for the self-funded plan for the entire year. So it really is kind of a month-by-month thing, fully insured by self-funded thing in terms of how this sorts out, which is also more complicated.
Harry, we also have some situations where we have a group of companies that are not really a control group, but they still have one fully insured plan that covers all the different entities. Is there anything different in that scenario than what you've already talked about?
Well, in that scenario, I don't think so, because the insurance company is going to be providing the B forms, and it'll be interesting to see what the insurance company does when it fills out the form, because it is supposed to provide the name of the employer on that form, and it will be I don't think there's a lot of detail in there about whether you can report with respect to the main plan sponsor, or I would think you'd want to do the company that person works for. But then when it comes to the C forms, you're going to be doing that on an EIN by EIN basis, and it really doesn't make any difference the source of the coverage. It's just that the person is being offered coverage.
Okay. They have common ownership. They're just not enough common ownership to be a control group across the board.
Gotcha. And that's a great point, David. You know, a lot of times, folks, we get worried about being what we call a MIWA under state insurance law, particularly if we're self-funded. And the standard of common ownership to avoid being a MIWA potentially, it varies by state, but potentially is lower than the threshold for being in a controlled group for this purpose. So that's a really, really good point, David, and that is you may have folks on the call today that can combine forces to offer coverage under a single plan and not be a MIWA, but they still might not be a controlled group.
I'm still not able to see the questions. I don't know if we have any more.
We don't have any more. No more questions.
Well, if that's it, Mary, I'd like to thank you for your time. It's interesting as always. I'm sure we'll be touching on this subject again more than once before the end of the year. Just a reminder, we are recording this. The recording will be made available early next week, as well as the slides, and we'll be in touch.
Thanks so much.
Thanks, everybody. Have a great day.